Hello traders, this is day number 38 of small cap market open trading. I've written a plan specifically to trade small cap stocks which are notoriously volatile and unreliable, but also a favorite of new traders to trade, and they often cause them to blow up their accounts. So today was a worst case scenario day according to my plan, which means that I took 3 losses in a row, so it's a minus 3R day. That's the absolute worst case scenario for this trading plan. And it comes nowhere near to blowing up your account. In fact, it's going to cost you about $1, $1.50 when something like that happens, and I can show you that's exactly what happened today. So I believe we have just today's P&L up. So there's what I took my 3 trades on. ORMP, we're down about $1.50. This minus 925, that's my swing trade with SPXL because the S&P 500 is pulling back today. So my day trading, the minus 3R, or the 3 losses that I took, amount to about a loss of $1.50. So definitely something that you should be able to withstand, and that's kind of the beauty of this trading plan. So let's take a look at the screener, and I'll show you how I pick these stocks to trade. And then the trades, I think you're going to learn a lot from, because even if the price action looks really good, if the stock looks really strong, there's never any guarantees, and that's why we always use stop losses. So the fact that I took those 3 losses, that I took those 3 stops, saved me a lot of money, and you'll see that on the chart. So here's my small cap screener. LGVN, I was watching at one point, but that one was going into halts, and before I could even consider an entry on that, I got triggered on the ORMP stock. So we'll take a look at that. But as always, I'm looking for 500,000 shares or more in volume, and I want to see 5% change or better in the percent change. So let's take a look at the video right now. So SLI was on the screener, LGVN, and ORMP, and the first one that gave me the entry by far was ORMP, so that's the one that I took the trades on. And you could see here, you'll see it better when I blow up the chart, but the price action was pretty clean earlier in the morning. You know, obvious ascending trends and then pullbacks and then more ascending, you know, following through. So it looked like very clean price action. Seems like a very obvious trade. But with the markets, anything can happen. So let me just show you my first entry where I got triggered. So I'm waiting for the break of a 1-minute candle here. So obviously that first yellow line is the previous session high. We broke through that. So that's the indicator number 1 that I want to see as far as the movement of the price action to start to look for an entry. And then here's the first high of day on this yellow line. And then this white line is the second high of day. So once I see that second high of day established, then I wait for a pullback. And as soon as a 1-minute candle makes a new high after that pullback, that's where my entry is. So this stock gave me a single candle pullback, which that happens sometimes, but often those are the ones that go one and done. So it's not a reason to not take the trade. So here I am hovering over this candle. The high is 2170, so I want to see 2171 or better to take an entry. So watch this price bubble over here. There you see it just popped right up to 2185, and I got filled at 2176. So I think 5-6 cent slippage there, 5 cent slippage. And the most important thing is to move that stop loss in place, especially on stocks like this that are very volatile. It could come down and stop you out right away, or it could flush down against you. If your stop is not in place, you may end up taking a much bigger loss than you planned on. So I've got my stop loss in place. My profit target I'll figure out in just a moment here with my XR calculator. So the profit target's 2260. So the trade is basically done for me at this point. All I do is let the trade play out. And there we get stopped out. I'll show you that in real time. It just comes out of nowhere. So, you know, imagine if you were just sitting here holding your hotkeys and you didn't have a hard stop and you saw that big flush. Would you be able to react to that? You know, or would you be like, what the heck just happened? And you're just sitting there holding, thinking, you know, what do I do? So that's the beauty of the hard stop, is it removes that emotional aspect from the trading. You've already decided where you want to get out of the trade if the price goes down that low, and it takes care of everything for you, having that hard stop in place. And that is definitely the best way to trade. So let's fast forward here. That's what we've been doing in the past 2 trading plans that we've been testing using hard stops and hard profit targets, and we have been profitable so far. So I'm not saying that's why we're profitable, but if you know, I don't stop out on the stocks that go against me, then that would eat away at my profits. So I probably would not be profitable. All right, so let's move on. And sorry, here's the next entry. Just waiting for a 1 minute candle to make a new high. This is an obvious area of consolidation because you could see how the highs of these candles are lower and the lows of the candles are higher. So there's a convergence here. So that tells you that this is an area of consolidation. So whenever I get triggered on an entry after consolidation, then I move my stop to the low of that consolidation, not the low of the previous candle. And you can see this thing did have some buying strength. There were people waiting for certain moments or signals or whatever to get triggered, and they were coming in and pushing the price up, but it just never gave a 2-hour trade. So, and that's going to happen sometimes. And again, that's why you use hard stops. Maybe this is a product of being the day before Thanksgiving. I have no idea, but it is what it is. The thing we're doing here is just following our plan 100% and just tracking the results. That's all. So here I am marking out where my ideal entry would have been, and also I'm going to mark out where my profit target would have been had I gotten that ideal entry. And my trading plan tells me if that profit target gets hit, then I stop trading. And that didn't happen today, but it is an important element of my trading. So let me show you that I stop in real time again here, 21. Again, I mean, this thing was crazy volatile. After showing some nice smooth price action, it just chopped around like crazy. So there was no way to determine that this kind of thing was going to happen based on what was happening previous to this. So again, that's why you use the hard stops, because you might think you've got this stock figured out. You know exactly how the price is going to move today. So I don't need to use hard stops. I'm just going to manually enter and exit the trade. But this is a perfect example of how things can change at any moment on any stock or any sector of the market. So instead of just assuming that you have it figured out, just put those hard stops in place just in case you're wrong. You're going to be wrong a lot more often than you're right. I can guarantee that. All right, so now, again, that's 2 trades. I'm allowed to take up to 3 trades per day. If the third trade worked, then I would get back my minus 2R that we're at right now. And that's kind of the idea behind the third trade. The third trade has the highest probability of working out, or at least close to the highest probability of working out. And that's why I take it. So there we got triggered again, move the stop loss in place. And I put it on the low of this red candle here because this was the candle that I got triggered on, but I just was not able to get in time. As soon as the price that I wanted got triggered, it bounced right back down here. And if I would have triggered my hotkeys at that moment, then that would have made the trade a lot smaller reward, a lot lower reward. So anyway, that's why I waited until the price got back up to where I wanted to enter, which I believe was 21.76. So right about there. Got my stop loss in place. That's where it would have been had I gotten in on this candle. And again, the trade is all set. I don't have to do anything. I don't have to worry. I don't have to think, what's going to happen or anything like that. I just let the stop loss and profit target do their thing. So let's fast forward and see what happens. So again, a lot more choppiness. So now you notice one thing here is that there's almost kind of a triple bottom forming here. And this looks like, this has got to be the low and it's got to reverse here. Well, nothing is guaranteed in the market. So again, just keep that stop loss in place. Don't be tempted to move it lower. Just put it where you originally intended and let the trade play out. You can see we're bouncing around right around where my stop loss is. And then we're going to take a look at the chart and I'll show you, well, what would happen if I would have given it a little more room? Maybe my stop loss is too tight. So right here, this is, I believe, this is the lowest stop loss that I had of the day. So that's 21.19. Let's remember that in just a moment. We're going to go over to the chart. So here we're at 21.20, just about to get hit. There, and look at that flush. So again, if you were just sitting there manually trying to work your way in and out of this trade, that would have been really hard to time that. I only got filled 2 cents lower than where my stop loss was on that fill, so even with that big flush. So that just shows you how, one, how quick the executions are in Webull, and two, how important it is to have a hard stop in place, because I would have definitely probably suffered about 20 cents slippage there had I would have stopped out manually. So let's take a look at that ORMP chart now and see what could have happened if I would have given my stop loss a little bit more room. So here, let's go to the charts. So let's see. So this is where this was our first entry over here, and then we got stopped out about there, and then our second entry right here, and then we were stopped out on this wick here. I believe that was correct. Yeah, and then this is our third entry was on this candle, and our stop loss was at the low, and we got stopped out here. And let's see what would have happened if I would have given it a little bit more room. So 21.19 is where my stop was. I got filled at 21.17, and let's see what this thing ended up doing. So 21.17 is where we got out. All right, so it looks like it might reverse there. Nope, keeps going lower. So now we're about $1 below, more than $1 lower than our stop loss. Still going down. Finally, here's a reversal right here. So it went all the way down to the high 19s before it reversed, and it's still going lower, looks like. Yep. So now it's trading around the low 19s, and we stopped out at 21.97, I think it was. Let me see. Let's go back up here. No, I'm sorry, 21.17. So just to show you what could happen if you bag hold, or you think, oh, well, it's got to reverse at some point. And I mean, yeah, that's probably true. But the thing is we don't know where that point is. And you might think there might be an obvious sign. This is the low of the day. So after it goes below the low of the day, that has to be an obvious reversal. And it does reverse a little bit there, but it just heads back down. This just ends up being a pullback on the way down. So that's not really a good trade there. So anyway, hopefully you learned something from this. Yes, it was a worst case scenario day, but our worst case scenario day is -3R. We lost $1.50 because we're only trading one single share, and that is the beauty of this test trading system, is you're only allowed to trade one single share. So even worst case scenario days are not going to hurt your account. So let me know if you have any questions about this. Happy Thanksgiving to everyone out there. I am absolutely grateful for all the viewers, all the likes, the dislikes, the comments, the critiques. It all means the world to me, so I really appreciate it. This whole reason why I make these YouTube videos was really to journal my trades and to hold myself accountable, so that I knew that if I didn't follow my plan, I'd have to share it with the world, and it would be extremely embarrassing. So that's what this all started with, and to also help new traders use Webull. So, and it's really turned into something I think a lot greater than that. So anyway, just want to say thank you to all the viewers out there, and definitely to my patrons. I really appreciate the continued support, and I hope to continue to improve all of the tools that are available there. So happy holidays to everyone out there, and I will see you probably not on Friday, probably on Monday. So have a great holiday weekend and take care. Oh, as always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.